There are 7 levels of investor. Most people never make it past level 1, not because they aren't smart enough, not because they don't work hard enough, but because nobody ever told them the game completely changes at every level. The moves that get you from $0 to $50,000 will actively destroy you at $5 million. The mindset that wins at level 3 is a liability at level 7. And the investors operating at the top of this pyramid, they don't even speak the same language as you. Today, I'm going to walk you through every level, what they think, what they own, how they see money differently, and exactly what it takes to climb. Let's start at the bottom. Level 1, the analyst. Net worth, $0 to $50,000. You know this person. You might be this person. The analyst is brilliant, obsessive, hungry. He spends 4 hours a day watching YouTube videos about technical analysis. He knows what a death cross is. He knows what RSI means. He backtested a strategy at 3 a.m. last Tuesday. His entire thesis is this: if I can just figure out the pattern, I can beat the market. Net worth, $0 to $12,000. He scrapes together savings, puts it in a brokerage account, starts trading. Maybe he wins. Maybe he doubles it in 3 weeks on a momentum play. He feels like a genius. And then the market does what markets do. It gives it all back, plus fees, plus taxes on the gains, plus the psychological damage. Here's the brutal truth about level 1. The analyst is playing a game he cannot win, not because he's not smart, but because he's playing against algorithms, hedge funds, and institutional traders who have billion-dollar infrastructure. He's bringing a dart to a laser fight. The analyst's biggest problem isn't his strategy, it's his belief system. He believes wealth is created by finding the right trade. He believes that timing is everything. He believes that if he just studies harder, he'll crack the code. And those beliefs will keep him stuck at level 1 for a decade. The only way out of level 1 is not a better strategy, it's a complete philosophical reset. Level 3, the allocator. Net worth $500,000 to $2 million. Something changed. The allocator used to be the analyst, but at some point, maybe after his 3rd blown account, maybe after reading a single paragraph by Warren Buffett, he had a revelation. He stopped trying to beat the market and started trying to own it. The allocator's portfolio looks radically different from level 1. He's in index funds, S&P 500, total market. He stopped paying 1.2% expense ratios on actively managed funds that couldn't beat a basic ETF. He started buying real estate, maybe a duplex, maybe a rental property. Suddenly, money is working while he sleeps. $500K to $2 million net worth. But here's what's really different about the allocator: his relationship with time. The analyst thought in minutes, candles, momentum windows. The allocator thinks in decades. He understands compound interest the way a physicist understands gravity, not as a concept, but as a force. The allocator has also done something psychologically rare. He decoupled his identity from his daily returns. The analyst's mood was controlled by the market. Up day, euphoric. Down day, existential crisis. The allocator has read enough history to know that corrections are gifts. He's also discovered the single most powerful financial instrument most people overlook: tax-advantaged accounts. 401k plus Roth IRA plus HSA equals $0 in taxes on growth. The allocator has maxed his 401k, maxed his Roth IRA. If he's self-employed, he's running a solo 401k with contribution limits that would make the analyst's jaw drop. He's not just making money, he's keeping it. The allocator isn't a genius. He isn't taking massive risks. He's just playing a longer, simpler game and playing it consistently, which is why most people blow right past this level without stopping to master it. Level 5, the strategist. Net worth $10 million to $50 million. At level 5, the game changes completely. The strategist has crossed a threshold that most people don't even know exists. He's no longer just building wealth, he's engineering it. The strategist barely thinks about the stock market anymore. At this level, public markets are too slow, too crowded, too inefficient. He's moved into private equity. Private equity average annual return 14 to 16% versus S&P 500 historical average about 10%. He's putting money into deals that aren't on any exchange, direct investments in private businesses, venture rounds, real estate syndications. His minimum check size? Usually $250,000 or more. These opportunities don't exist for level 1. But here's what separates the strategist from everyone below: tax architecture. The strategist doesn't take a salary if he can avoid it. Salaries are taxed at ordinary income rates, up to 37% federally. Capital gains? Long-term, they're taxed at 20% max, sometimes zero. Carried interest? Depreciation on real estate? Opportunity zone investments? The strategist has a tax attorney, a CPA who specializes in wealth, and a family office beginning to take shape. Effective tax rate? Level 1, 28%. Level 5, about 11%. The strategist also thinks differently about risk. At level 1, risk meant I might lose this trade. At level 5, risk means I might lose this decade. He runs scenario analyses. He stress tests his portfolio against recessions, currency crises, regulatory shifts. He doesn't just have a plan B, he has a plan D. He's also obsessed with asymmetry. He looks for bets where the downside is capped and the upside is unlimited. He thinks like a chess player, not just the next move, but the next 15.
Level 7. The Architect. Net worth $100 million plus. Let's be very clear about what we're describing here. The architect is not a better version of the analyst. He is an entirely different species of financial being. The analyst asked, "What should I buy?" The architect asks, "What should I build?" The analyst was moved by markets. The architect moves markets. At $100 million net worth, you stop buying stocks. You buy companies, not shares in companies. Companies, controlling stakes, operating businesses. You acquire cash-flowing assets the way a level 1 investor acquires positions, but the chessboard is completely different. $100 million net worth equals approximately $3 to $5 million passive income per year at 3 to 5% safe withdrawal. The architect has made the rarest transition in all of finance, from capital accumulator to capital deployer. His wealth no longer depends on his labor. It doesn't even depend on his decisions. He has a team for that. His wealth depends on systems. Systems he designed, systems he stress-tested, systems that will outlive him. The architect also operates in a category level 1 doesn't know exists: relationship capital. At this level, the most valuable currency isn't dollars, it's access, trust, the phone call that gets returned. The architect has sat in rooms where industries were reshaped, where policy was quietly discussed, where the deals that move markets were structured before the market ever heard about them. His legacy strategy is also operating at a level that makes taxes almost irrelevant. Dynasty trusts, family limited partnerships, donor-advised funds, charitable foundations that also generate returns. He's not just minimizing taxes, he's engineering the transfer of generational wealth across decades, legally, intentionally, silently. Dynasty trust equals unlimited generational wealth transfer. But here's the thing about the architect that nobody talks about. He's calm, not numb, not disconnected. Calm. The analyst was addicted to the dopamine of the trade. The architect has found something deeper than that. He's found meaning, legacy, the quiet power of compounding, not just in accounts, but in relationships, in impact, in time.
7 levels. 4 we explored together today, each one requiring you to unlearn what made you successful at the level below. The analyst must unlearn the addiction to action. The allocator must unlearn the fear of boredom. The strategist must unlearn the myth that harder work means more wealth. The architect must unlearn the idea that he is his net worth. The question isn't which level you're at right now. The question is whether you know what the next level actually requires. Because most people are working hard at level 1 strategies while wondering why they never reach level 3. They're applying level 3 thinking and wondering why level 5 feels impossible. They don't need more information, they need a new operating system. If this video was that operating system update for you, subscribe, because next week we go deeper into what separates level 3 from level 5, the exact tax moves, the investment structures, the mindset shifts with real numbers. Stay in the build.